Hey guys, welcome back. In today's video, we are talking about the AMC expansion, shorts trying to increase pressure, the short errors caught, and many more in this video. Firstly, we're taking a look at this. This is something we've already talked about, but it's AMC and Netflix announces strategic partnership to expand streaming and theatrical reach. So this is the big news that we have seen in terms of the partnership that AMC has. Essentially, AMC is collabing with Netflix to show one of their films, and we have the possibilities for future collaborations. And so we have talked about how there is a big reason for why this is happening and the indications this has shown. Firstly, when we take a look at what this means, well, it means that every time the short sellers, when they made the argument that you should sell your AMC because it's in a dead industry and that Netflix is the only one that's going to thrive, clearly they were wrong. And we know this because Netflix needs AMC right now, and I'll talk more about that later on. But then it's just talking about how, as we've said, people seize the opportunity in AMC. People realize the potential that has been in AMC and now are trying to captivate on this. We've already talked about how the AMC film distribution, that has already expanded and what that means in terms of their recent collaboration with Taylor Swift. Now we're seeing firms like Netflix to partner with AMC as well. So you can definitely expect in the future more collaborations, but also the expansion that AMC will have, the reach that AMC will have, and how that will increase their revenue, the profit, and why we are on the trajectory to obviously do even better. But now let's talk about why AMC is just in a very strong position and why firms like Netflix need AMC right now. You can see this is why Netflix finally partnered with AMC. So recently, one of the big films that Netflix released for Netflix only was Happy Gilmore 2. And we know for the movies that's been released, there has been plenty. And when you take a comparison between the two, you will see the clear difference. Let's talk about one of the ones we've talked about recently, which was Demon Slayer, which has done extremely well. And you can take a look at the comparison. Firstly, the cost for Happy Gilmore 2 was 152 million, whilst for Demon Slayer it was only 20 million. When you take a look at the global box office, because Happy Gilmore 2 was a Netflix only, it didn't have a global box office, but for Demon Slayer, it was 617 million. And then you're looking at some of the other points. Online sales and rentals, no for Happy Gilmore 2, yes for Demon Slayer. Physical media sales, no for Happy Gilmore 2, yes for Demon Slayer. Paid to stream on other platforms, no for Happy Gilmore 2, yes for Demon Slayer, and then streaming on platforms is yes for all. So you can see the clear difference between films that are being released as a movie that goes into theaters versus the films that are being released and going into Netflix. And now, again, with another thing about Netflix recently is we've seen how Elon Musk have obviously started the movement with cancel Netflix. And so right now, this is Netflix trying their best after everything they've said, after everything they've done, to actually regain market share. And the question we're asking here right now is, for a company that has boasted how well they're done and now are facing losing of market share and is in need of trying to get it back, why are they relying on AMC after everything they said? So this is to really people who didn't believe in AMC, who still doesn't believe in AMC, and talks about how AMC has no room for growth. Well, this is something that we're looking at right now, and this proves the point that AMC has plenty of room for growth. And we're seeing this happening right now. We're seeing how shorts are worried about this, because in this week of news, and I talked about this on Twitter as well, you can see for today, 70% of today's AMC volume was traded off exchange in the dark pools. Only 9.8% hit the NYSE. They call it a free market, but 70% of trades are hidden from public view. If AMC was really dead, why hide so much of the action? So you can see for the off exchange, we're looking at 70.19%. Now, something I made on my Twitter as well, which is talking about, firstly, it was to talk about the AMC off exchange volume for today, which is 70%. But more importantly, it was to talk about how throughout this week, we saw how the off exchange volume was 70% plus for every day this week. And some point it was at 75, and some day we saw over 40 million volume being taken away from us. And so this is already showing the suppression that is happening. You should really understand by now that the reason why we talk about price discovery, the reason why we talk about price action, and why we've never see the real price for AMC is because so much of these volume are being hidden away and they're not actually having an effect on the market. And then it obviously goes on to, if AMC really was a company that was going to fail, that was going to go bankrupt, and no one cares, so no shorts are trapped, no retail investors trying to buy AMC, why would they feel the need to hide it? The reason why they're hiding it is because they don't want AMC to go up. But if they truly believe that AMC is naturally, the course for AMC is to go down, and that is naturally going to go down, why would they feel the need to hide all of these volume? And so that really explains everything. Now, I know obviously some people still may not believe it, and that's completely fine. But take a look at the off exchange and understand that this is way above the average for a stock. And when you take a look at the volume that are hitting the off exchange, and the majority of them being made up with buy orders, you understand why we talk about how the real price discovery is being taken away from us and why we never see real price action. And you can also see another example, which is how two big orders after hour for AMC. This is what we've talked about plenty of times by now, which is how you'll often see these buy orders come through for AMC after hours. And going along with the dark pool as well, oftentimes you're going to be looking at how things that will affect AMC positively are always either A, being stolen away from us, or B, happening in times where it doesn't have an effect. So what I mean by that is obviously the first thing we're talking about is when we're seeing plenty of buy orders, which would positively affect AMC, we're seeing it being hidden in the dark pool. Then when we see orders that are coming through that will have a positive impact on AMC, is happened after hours, where once again we see how it doesn't have massive effect on AMC. And so this is just showcasing why true price discovery is important and why we've never actually seen it for AMC. And then you're looking at this as well. 1.1 billion options error on one day for October 1st of 2025. To those who are surprised by what's happening in our financial markets right now, you haven't been paying attention. Some of you even mock those of us who have been paying very close attention. And so this is something that's obviously crazy. You can even see the 1.1 billion options error on October 1st, the day prior to needing GME shares to be eligible for warrant dividend record day. And so firstly, let's talk about this. The errors that are always happening, once again being caught by the CAT system. And so this is the importance of the CAT system. And once again, this showcases why the short sellers want to get rid of the CAT system, because they can't keep having their trades being exposed. But secondly, and this is something we've always said on our channel, every time there's something that's about to happen with either AMC or GME, you see things that don't normally happen. And we've talked about this. Whenever you're seeing AMC take off, you're suddenly seeing price glitches in price, glitches in shares outstanding, glitches in market cap, the same for GME. And this time, as we're seeing the shares available to be eligible for warrant dividend record date, we are seeing a 1.1 billion option error on one day. And we've known what these errors have done in the past. We've known why we've seen errors. We've known what they can do with options as well. So it really doesn't surprise us that we are, of course, seeing this. Paired us up with the reverse repo sitting at 4 billion. Once again, we are extremely close to going to zero. We're extremely close to seeing the reverse repo drying up, and that itself, it's obviously a very, very good thing for us, because it means that the shorts will be struggling to suppress AMC because they won't have the access to easy liquidity anymore, and that ultimately is what we want to see. And so along with everything we've just talked about in terms of why they're trying to increase pressure, why we're seeing the errors, you start to see why everything is obviously making sense. And there's no surprise that they were blaming us. This is an article we talked about in terms of how short sellers were heading for their worst years since 2020, and they blamed the retail investors for acting irrationally. Short sellers have always called, and institutions in general have always called, retail investors to be dumb, to have made these decisions that are not rational, that are not financially responsible, and are losing their own investments. That's something that the short sellers have always said. But now, as the short sellers are losing money, they're now saying that it's because of the retail that's causing them to lose money. So if they originally said that retail investors are losing their own money and being a zero-sum game, it would mean someone else will be making money, why are they still losing money? And clearly that is because we are making the right decisions. We are causing problems for these short sellers, and they're seeing how this is starting to become a massive problem right now. They're seeing how apes aren't willing to leave, and that their positions, their P&L, their losses is only getting bigger and bigger. As always, none of this is ever financial advice, so do take cards to go and sell. Make sure you do your own due diligence and research, and I'll catch you guys next time.